Hey guys, Keith Boykin here with Blackwell Realty, and again we're here with Kevin from Redstone Federal Credit Union, and we're going to talk about what points are. So I know that a lot of lenders have talked about, hey, we'll buy a point here or there, and sometimes people don't understand what that means. Kevin, would you like to explain that?
So points are a great way for you to lower your interest rate, essentially. It's an exchange where you're going to pay a higher fee on the front end in exchange to save money over the term of the loan with a lower interest rate.
So are you just basically paying what that interest would have been between the two? So if you were at 3.5 and you bought it down to 3, would that buying it down, is that essentially just going ahead and paying the interest on the front end?
It's paying the interest on the front end up to a certain point. So when you're talking to your loan officer about whether points are right for you, it's important to talk about what the break-even point is. So how much is the points gonna cost you? How much are the points gonna save you? And you do a division problem where you're trying to calculate what's your break-even point. Most points, you're gonna break even sometime between 4 and 6 years. If you're breaking even between 4 and 6 years and you feel like you're gonna be in the house for 6 to 10, points are a great solution for you to save money, absolutely.
But now, saying that, most people stay in their house for 5 years. Generally, you're moving after year 5 because you built up enough equity that you can go and get to a bigger house.
Correct.
So you do need to pay attention to that break-even point, because there's no point in paying the points down if you're only going to be there for 5 years and your break-even point doesn't reach until year 8. So you've got to think about those things. And I know that everybody believes that this is their forever home. That is not the case. Please stop believing that. You'll be there for 5 years. I promise you. Generally what happens is you get in the house, you buy more stuff, and your family gets bigger, and so you have to have a bigger house. And then you also see what your house is worth in 5 years, and you're like, woohoo, let's sell it. So points are a good thing. Anytime that you can lower your interest rate is a good thing, but you need to make sure that it's going to be beneficial in the long run.
Correct. When you're shopping for a mortgage, it's important to pay attention to the Section A section of your loan estimate. It's going to tell you what your lender fees are. It's going to tell you what your points are. And that's going to give you the best method to shop for your mortgage.
There you go, guys. Again, you can reach Kevin at
615-961-7919, and my email is kloftis@redfcu.org.
And guys, you knew how to get a hold of me. My number is 615-788-9356. Thank y'all.